Hello and welcome to Mint. I am Nasrin Sultana. Indian markets have been going through a volatile session. On the day when election verdict was out, Sensex and Nifty touched record high but ended at lower levels. What does it mean for a retail investor? To take us through all the details, I am joined by Mr. Gaurav Dua, who is the head of capital market strategy and investment at Sharekhan. So, Mr. Dua, welcome to the show.
Thank you.
I want to know what the investors are looking for is what Modi 2.0 mean for the markets now.
What we have seen in the past this 5 years that Modi this government has this thing made the base for the economy. He has this thing taken the structural this thing reforms. So what we this believe is next this 5 years the this government is only going to this build on it. We are looking and this thing expecting the this government to take some steps to ease the farm stress, boost the economy, and also address the issue of this in banking system where we see a squeeze in the liquidity today.
Right. So, according to you, where are the markets headed now? Because there are a lot of volatility in the markets. We have seen quite wild swings even on the day after the exit polls were out. Even on the day when the results were out, they were markets touched record high and then it fell at the closing. Where do you see the markets going ahead now?
So we have had a run up after the exit polls. And obviously the thing sentiments are upbeat. So what we see is that in next next around this 6 to 8 months we could see another upside of this 5 to 8%. But more importantly, once the this benchmark indices stabilize at this higher level, you will start seeing activity in this broader market, and we could see a lot of this buying interest in this mid caps later.
Right, but as you said that you are expecting around 5 to 6% rise on the markets. That is a quite bullish view. Do you see mid caps and small caps joining the rally?
Yeah, as I said, we might end the year around at around this 13,000 level on this Nifty, and once the this benchmark indices do this to make a new high, you start seeing activity in this mid cap space as the investors start to explore this thing, value in this entire two stocks. And after the fall that we have had in this thing, mid cap space for the for this 1 year or so, there are this spaces there where we see value.
Do you see the challenges that we have on markets easing out by the year end?
So there are some this economic macro headwinds, and I think as and when government starts addressing them, you will see some upside in the market. And plus, after 5, 6, 8 months, the this thing valuation will also roll over to FY 21, and that's where markets this thing will not look so stretched. So our this prognosis is that by the end of the year, the markets could trade at this 18 times FY this 21 earnings. That is why we feel that there is upside in the market. Of course, the upside will have to be this thing supported by the earning growth. Earnings in this quarter 4 have been mixed. However, we feel that the improvement in the health of the banks is going to this drive the earnings over this next 2 years, and that is why we see scope for upside in the markets.
Right. So as you said, banks is going to kind of drive the earnings. But if we take away the banks, do you see an earnings culprit in the truest sense? Because there are a lot of concerns about consumption, being a slowdown in the consumption demand. Do you see that coming up?
So if you read this thing BJP's this manifesto, they have talked about a lot of investments and a clear this roadmap how they are going to invest close to this 10 lakh crores in this infrastructure. In infrastructure, Prime Minister this Modi has emphasized that a lot of investment will go into this water linkage. Apart from that, in last this few weeks, we have heard how the government plans to invest a huge amount of money in this thing rural regions to this thing boost the sentiments there, boost the this thing, rural demand, ease out the stress there. So I think all these will start showing in the numbers, and that is why we feel that there could be a scope for this re-rating here, but that will be to in some this specific spaces.
Okay, but do you see DI money coming back, because we are at a scenario where FIs are net buyers for this year altogether, and DIs have been net sellers. Do you see this math going different, or since there is a lot of pressure in the US-China trade war and there's a pressure in the global markets, do you see the FI DI money coming to India?
So it is not easy to this thing predict the this flow of funds, especially from this foreign institutions. However, we see that with slowing down in this US economy, there's no scope for this interest rate hikes there, and there is ample amount of this thing liquidity available, which is this thing looking for this thing returns. And with this new this government in place, we believe India stands a chance to get more than this fair share of their this allocation. So overall, we believe this thing there will be flows into India. In terms of the domestic flows again, there is lack of opportunities for investments, because this property markets are not doing well, gold is not doing well, debt markets again are struggling. So I think there will be some flows into equities.
Right. Thanks, Mr. Dua. That was insightful. So for more details, stay tuned.
Thank you.